What's going on, everybody? Hi, Lawrence from Financial Thing here. A couple of minutes early because I've been so tardy recently. As you know, I missed you all though. Apologies I couldn't be here. Things were going on. Personally, I just wasn't able to make the streams over the last couple of weeks. But I'm back now, so I hope to be back consistently. Yeah. How's everybody out there doing? It's very, very hot here in Orlando. And as you know, my air conditioning broke a couple of weeks ago. So I had to vacate the house because it was unbearably hot. If you ever visited a very hot, humid country without air conditioning, it's almost unbearable. And I thought maybe I could do the stream here during that time, but it was just impossible. So I had to leave. Anyway. We're going to have Peter Reed from Assetz Exchange just a few minutes coming on to really do an update. It's been about a year since I had Peter on. I thought it was sooner than that, but looking back, it was June 2021. And how time flies, huh? We're getting older every day. Today is the youngest that we will ever be. Contemplate that. Yeah. What else is going on? I'll try to be back on Tuesday for a stocks and crypto update. Everything is getting bloodied in the markets and kind of give my input on what's going on, where I think we are heading. Little preview. I don't think it's good. I don't think the economy's in a good place. I think we are heading for a very, very rough rest of the year. But in any case, yes, Peter, I'm feeling better. Thank you very much. I still got a bit of a lingering cough for some reason, but I don't know what I had. I don't think it was the vid. But yeah, it took me out for a good 7 days. But I'm back now. Stronger, healthier. Just reading about this Roe versus Wade law overturned in the U.S. Crazy. Anyway, let's not get into politics. Quick shout out to everybody. Please hit that thumbs up if you can. Tells YouTube that you actually like the stream and that other people may want to come watch it. Mike Powell's here. He says, evening. Thanks for turning up. Only 2 days late. I know. You know, I almost canceled tonight too, but things turned out that I could be here. Aki Chap is here in Accrington. Good to see you too. Colin, of course, in the Peak District. Peter Vince in Leatherhand. Stephen Hale is in Nottingham. Paul is in Kenilworth. Dave Ellard is here from somewhere. We don't know where. Hi, Dave. Nice to see you. Norman P. in a sunny but cool Sussex. Very nice. George Batchelor in Bridlington. Stephen Hell said he was in Orlando for a week 3 weeks ago. Much needed apart from the thunderstorms. He much needed the AC. You do need it here. It's very, very hot. The GW is a thing. Something warming. It really is. I don't remember it ever being this hot here in June, but we're almost in July. Paul says we might be getting a few pence back from collateral. Let's talk about that afterwards because I want to get your take on that. But let's bring Peter on. Let's get going. Let's not stand on ceremony. This is a good day. Let me go ahead and bring him on. Give me just a second. Where are you, Mr. Reed, on my long list of... Here we go. This Skype music is so funky. There he is. Mr. Peter Reed in full effect. Hi, Peter. How's it going?
Hi, Lawrence. Very well, thank you. And thank you for inviting me on your show. And thanks, everyone, for listening to me.
Well, Peter, you know, the pleasure is always ours. And thank you for spending your lovely, it looks like a very lovely sunny evening there. And where are you right now?
I'm in Guildford, just, south of London.
It looks very sunny. Is that sunshine I see outside, or am I just imagining things?
It's a very British weather. It's sort of like dappled sunshine in between thunderclouds.
Well, you know, we'll take that, right, on a what time is it? 7:30 p.m. Yeah, that's not such a bad thing. Let's talk about Assetz Exchange. It's been a year I think, or I think it was the 21st of June, maybe was the date I had you on. So we've had a full year to see Assetz Exchange grow and to see it marinate. Maybe that's not the right word, but to see it flourish, hopefully. So we're going to get kind of an update from you. So we spoke a year ago. Since then, what are some of the goals that Assetz Exchange and yourself being at the head of the ship have been able to accomplish since we spoke?
Yes, I think some of my colleagues might dispute me being the head of the ship, but it's certainly part of the management team. I think our biggest goal is the fact that we have now been modestly profitable for several months, which has been fantastic, because I don't think we're much use to many people if we're not profitable. And I think that is the result of some other things that we've got right since we last spoke, Lawrence. And I think in June last year, we had already made a decision as a team to focus on supported living, and my colleague James Tedrick very much took the lead on that. But I don't think the effects of that had really begun in full. And since we spoke with you, I think we've originated a lot of property now, and they're all supported living, and the benefits of that have been brilliant for us. So just to touch on those quickly. The leases. We started off in 2019 as a platform, and we were looking to make it easy for people to create their own buy-to-let portfolios. And we were working then. The idea, at least, was to work in partnership with Assetz Property, and we were going to dovetail on the back of their property sourcing. And the properties we found were all tenanted under ASTs. These are short-term tenancies. So, people like you and me tenanting the property. The problem with that is that it wasn't scalable at all. The margins were extremely low, and there was lots of maintenance and management time that takes up looking after those properties. We were then introduced to corporate leases. So we bought some show homes in February 2020, and they were a revelation in so much that you had this fantastic counterparty in terms of this developer called Avant Homes. We leased it back to them, having bought the properties, portfolio of 10 of them, and then they were under full repair and maintenance leases. So they paid like clockwork throughout the pandemic, and they were just been amazing. The problem with those is that when the development ends, what do you do with the property? Do you want to sell it? In which case, there's often go for a period of voids when you're not getting income from that property, or you can tenant it under a regular AST, and then you're back to massive yield compression. So a property that might be let to Avant for say 6% would fall to say 3.5%, because you've got to pay all sorts of bills, etc., etc. So James very much took it upon himself to address that problem, and we landed on supported living. And the reason being is that we now provide properties to people who have lifelong conditions, and so those conditions might be, say, autism or learning disabilities, and it means that they're perfectly wonderful people like you and I, but for various reasons they can't really hold down a job or things like that. So they should be living in a community. They should be living in a house like anybody else. But they need to be looked after, and they usually have those conditions for the whole of their life. So we supply the property for as long as they are needed, and so you can overcome that hurdle of like, what do you do with the property at the end of the show home's life. So we've now got this very long tenants, occupants. So the people who actually tenant the properties are these charities and housing associations and people who provide supported housing. They are usually, or in most cases, they are substantial counterparties. So they're regulated, they're institutional, and our largest partners, NACRO and Golden Lane Housing, they've got balance sheets that have like £100+ million on them. They're big organisations. And in turn, they claim the housing benefit on behalf of the occupants from the local authority, who in turn claim that from the Department of Work and Pensions. So you've got very good quality tenant who are claiming the money basically from the government, and that's fantastic. In addition to that, it's not full repair and maintenance leases. They what we call internal repair and maintenance leases. So if the walls need repainting, they take charge of that. If the washing machine breaks, they take charge of that, etc. But if the roof falls in, then that's our problem. So, but it does mean that the day-to-day maintenance usually associated with buy-to-let property is not so much there for us. So it's a much more scalable product. And then the another big benefit of this is that they typically pay significantly over market rent. So we are offering yields of between 5 and 6% on these properties, which compared with an AST, once you've factored in all the taxes and bills that you have to pay, which is usually about 3.5% in our experience. So we're offering higher yields for these fantastic tenants and occupants, and that seems to have struck a chord with people, and we've been able to originate quite a few properties, and that's been a key driver to our profitability. I would also add a final thing though, is that the leases are linked to inflation, and in the environment that we're currently in, I think that is a compelling reason for investing on Assetz Exchange. So that's been one key driver for becoming profitable. I think the other key driver has been the investment we've made in technology, processes and administration, and that's been spearheaded by another member of the management team, Ben, and he has essentially created an administration system that means that we don't have to employ lots more people, and that has meant that we've kept our cost base fixed, which has been great. So as we've been able to earn more money from originating more property, we haven't had to scale up our cost base as aggressively. So that's meant that we've become profitable, which is fantastic. I think it's been jolly hard work, there's been no doubt about it, but these are our big goals that we've achieved since last speaking, Lawrence.
Well, that is very, very encouraging to hear. One thing I wanted to ask you, you mentioned if the roof fell in. Have you ever had a roof that actually fell in?
No. And as we said, if we did get a roof that fall in, we do have buildings insurance which would cover that.
Okay.
But there's not to say that there wouldn't be some disruption, because I should imagine there would be a lot of disruption. But we have had circumstances whereby, for example, the patio door has cracked and we've had to replace the patio door. We've had another one where the occupant complained about wear and tear on the driveway, so we had to get the driveway redone. Those are the kind of things that we've incurred. But literally, we've got 4 properties of ASTs out of the 50 properties that we've got on the platform now, and those 4 take up a disproportionate amount of our time.
So I was going to ask you that too. So have you had any tenant issues with the non-AST at all? Has anything propped up that you're like, oh wow, that's interesting? That they've just been relatively quiet.
Well, for the supported living, no, we haven't. It's a simple answer to that one. These are large organisations, and they can be kind of bureaucratic at times, and so there's payment issues that they paid to the wrong accounts or something like that. So admin errors, but nothing that's been like, oh, all right.
Yeah. So you basically
something unexpected.
So you basically spent very, very little time managing the non-ASTs that you have, as sounds like 95% of the portfolio, and then the 5% of the portfolio, which is the ASTs, are the ones that kind of provide you with the standard landlord headaches that most landlords experience with buy-to-let.
Yeah, exactly that. So, over lockdown, when the pandemic started, there were issues with the tenants. Understandably, some of them said that they couldn't pay, so you had to be open-minded and forgiving on that front. And then you had other people that just wanted to take advantage of the situation. So we had one tenant who just refused to pay. It was as simple as that. He could pay. So you spend a lot of time trying to chase up on that. And then, we've had other ones where you're trying to sell properties, and selling properties is a tough gig. It takes time. and lots of effort.
It sure does. Have you found that sourcing the properties to buy has it gotten easier over the last year since I last spoke to you, or what's that been like?
So that is a big challenge. There is no doubt about it. And it's not universal. So we've got one partner, Golden Lane Housing. They very much in the driving seat. So they will have someone who needs to be looked after and in the home, and they will say to us, right, we found the home, we've been to look at it with the person who wants to live there. Here are the details. Go off and buy it. Life, that's pretty straightforward. And they also might say, we've got a landlord who's got someone in there that we look after, and the landlord wants to sell, and it's much easier if you just go and buy the property from the landlord, please. And we go off and do it, which is great. NACRO, which is a social justice charity, also a large charity, they've got a contract with the Ministry of Justice called the BAS contract, which is a Bail Accommodation Support Service. So they want us to go and find the properties for them. And due to the nature of the occupants, those properties are not that easy to find. And you can't be in a cul-de-sac, can't be near schools, it's quite strict criteria. And then you've got to go and get police checks, you've got to get local authority checks, you've got to get the charity to agree to it, and you've got to go and see if there are any issues. And in a hot market, by the time you've been through all of that, the property's gone, it's long gone. So that has been a challenge, and we've haven't bought so many properties recently for NACRO, but I think it's fair to say that NACRO have realised that that's a challenge, so they're prepared to invest in it, and that's enabled us to be able to go and put some more boots on the ground to go and find those properties, which is good. And also, I think inevitably it's too early to tell really, but over the last 3 months, you definitely feel there's been a bit of a change in the property market, as is the wider economy, quite frankly.
Yeah, I think as the interest rates start to increase, obviously that should put a cooling on the housing market supply.
Absolutely.
Yeah, we'll see though. I was going to ask you, so what is the current size? By the way, before I say that, listen, everybody watching out there right now, is about 28 people live. You guys, if you want to ask a question to Peter, this is a guy who's in the know, and you won't get this anywhere else. This is a unique opportunity. I don't think people realize this, but to have an opportunity to ask, somebody who is really involved in this business, which is you, to ask you anything you want, anything, the lines of communication are open. This is a very unique opportunity. You won't find it anywhere else. So if you want to ask a question, if you ever thought about investing through Assetz Exchange, and this is your opportunity to do so. So don't be shy. Ask away, okay? Because he'll be gone in probably half an hour or so. And maybe you won't get this opportunity for another year. So we'll see. Anyway, tell me about your current loan book size of the portfolio size.
So, we are still a small business. So we've got 50 properties now on the platform, which is great. And that's just under £20 million in value, all in. The loans are typically 3 to 5 years. They match the leases, so there are break clauses in the leases. And as I said, the interest rates that we pay, the interest we pay is between 5 and 6%, and that is creeping up. We've had conversations with some of our prospective tenants saying, they need to be prepared to pay. Elsewise, we can't fund the opportunities. But as I said, also, they are linked. The rental payments are linked to inflation, so they're linked to CPI. So every year to April, I think it is, the rents are reviewed according to inflation at that point in time, and then they take effect in September, the following September. So we've already started to see some of those coming through, which is great.
And compared to a year ago, when we last spoke, what was your loan? Do you remember what your portfolio book was around then, about a year ago? I
think it would have been under half that. It was, I mean, from memory, we had the Avance homes, we had the USA ESTs, and then we had Old Basford, and we had a couple in Bristol, I think. But Golden Lane Housing hadn't really come online at that particular point. So, I mean, we've grown a lot over the last year.
Yeah, absolutely. You have. It's good. You're going in the right direction. So, interest. I get asked this question a lot. As interest rates are going up, people are naturally assuming that their peer-to-peer lending investments should be paying them more because of this. Some people think it's directly correlated. And what we found with peer-to-peer lending is because the competition is high, that a lot of peer-to-peer lending companies cannot increase their interest rates to borrowers because they're trying to compete with other borrowers, so they have to be competitive and keep their rates reasonable. You mentioned that you possibly see an increase in what Assetz Exchange is able to pay in returns to investors through using rent increases. Is that correct? Did I understand that correctly?
Yeah, so it's really interesting dynamics that are going on in our space. So on the one hand, yes, technically we are a peer-to-peer operator, and we we compete with the other peer-to-peer operators for people interested in investing in peer-to-peer. But in terms of the actual end product from the borrower side, we provide supported living, and the REITs on the London Stock Exchange probably more in line with what we do. So I'm talking about Civitas Social Housing REIT, I'm talking about Triple Point Social Housing REIT. So the reason I'm mentioning them is that competing against them, they've been in the game for 10 years, 15 years. They are very well established. They've got very large portfolios. But what James has been able to do is essentially undercut them. So they will go and buy from middlemen aggregators. They will pay quite an inflated price for the properties because they've got long leases associated with them. And as a result, they put on a bigger charge to the local authority for these properties. So what we've effectively done is we've been able to say to the tenants, we will provide you these properties, which are identical to the ones that the REITs do, and we'll provide them on the terms that you want. And there's a balancing act. So these guys want security that the property is going to be available. It's not going to get taken away from them next year, but they don't want to be locked into a 25-year lease. Mm-hmm. And so what that means is that we say to them, well, you take the lease that you want, and they usually want 5-year leases with 2-year breaks. And they want it then with the expectation that it will roll and roll and roll for as long as they want it. So it could end up being a 40-year occupation of the property, but it's done in 8 lots of 5-year leases. Mm-hmm. And that means that we are significantly cheaper than the REIT, and these are the only alternatives that these charities have been able to go to. So we've been able to have a conversation, and those conversations have started with some of our tenants going, look, we are not going to be able to buy you the properties and the volumes that you want unless we can go and deliver our investors a certain percentage yield. So, we can't increase the properties that we've already got, but we can say to the properties that we're having conversations with our tenants and partners about, this is the kind of financing levels that you should expect for us to be able to buy it for you. Mm-hmm. And because we've basically been giving them a great deal so far, they're open to the conversation. It's not like we were charging them extortionate money. We were charging them a fair rate in comparison with other financing providers. So I think, those conversations haven't reached a conclusion, but you can start having them. So I think we're relatively confident that we can, potentially increase the rates from where they are. And also we've got this inflation hedge in there with the rent as well. So
yeah, that's a nice feature because, man, inflation, I was hearing this, it's transitory, and I knew the whole along it was not transitory. I even said it about a year ago. It's not transitory inflation. It's a big problem. So the fact that you have this inflation hedge built in to your business model on the rent side is really important factor. So good job.
Yeah. Well, James can pat himself on the back. No, I think when you speak to people, we don't offer the highest rates in the peer-to-peer world, but we do offer very good quality tenants, counterparties, and this inflation link. And I think for many people, they think that's a good thing.
Absolutely. Now, I was just bouncing around a little bit on your website in the investments because I wanted to just understand the way it works. I'm just going to pull it up on the screen. Here, hold on 1 second. Okay. If you're looking, so somebody in the comments said if they were to put money in, some of the issues with other peer-to-peer companies is this cash drag, so their money's sitting idly in their account, not being able to be used. The way that your investments work on Assetz Exchange is that it's loan pieces that are for sale, sort of on a secondary market type thing. So it's all based on demand and supply pricing. So whatever somebody decides they want to sell their loan piece at, and that can affect the way that the property is valued in that respect. Correct. So if I'm just looking, I'm going to pull up
Absolutely correct. Yep.
Yep. So I'm going to pull up this Scarisbrick. Is that the right way? Scarisbrick.
Absolutely.
What a great name. Whoever came up with that. I mean, gosh, what a mouthful. So if you're looking to put money in as a new investor, so you want to buy some Scarisbrick loan pieces, you come in here and you can see on the right side, let me zoom in a little bit so it's a little bit clearer maybe for people at home. There's an order book here on the right, and it shows you the amount on the left that people are looking for. So the green is the demand side, and then on the red side, the sell side, this is what people are selling of that particular property. Now, one thing I didn't spot early on was there's this little down arrow. So if you're looking and going, well, what actually is available? It shows you, if you click on that down arrow, these are all the pieces that you can buy. And what happens is the yield changes based on what somebody is willing to sell their loan parts for. So we have this guy here, let's call him Bob, who's looking for £1,349 of this Scarisbrick Road. He wants a 5.56% yield, which then values the property at £568,281. And then on this side, we have some yields, main amount of 5.51%, valuing the property at $575,000, all the way down to people who want to get more for their loan pieces. So they increase the price and then the yield falls because you're paying more for your loan piece. And on the very bottom end, we have 5.19% that is netting the price of the house valuation out as £615,316. So quite a big differential. Now, I got an email this week from somebody saying, I don't really like the way that the house is valued based on the demand and supply of what these loan pieces are being sold for on the secondary market. What's your kind of response to that?
Well, I think we are called Assetz Exchange, so the clue is in the name, and what you've just described there is an exchange for each of the different properties. We do have this ability to link the price, for the loan parts to go up and down. It's not directly in sync with the properties, but one assumes that if the market is relatively efficient and the property goes up by 20% in value, then potentially the loan goes up accordingly to reflect that. So I think it could be. I think it's a fairly standard metric in the financial markets. You've got an order book, you've got a market there, you've got the trades in the market there, and then the value of the property is determined by that supply and demand. At the end of the day, it could be that in 5 years' time, the investors in the property decide that they don't want to renew the lease, they want to sell it. And in which case they would instruct us to sell it through a vote, and then we would sell the property. And then at that point in time, they'd have to be fairly confident that they would get the value of the property plus all the costs associated with purchasing it, etc. And the order book should kind of reflect that. And it does. We're in the process of selling one property at the moment. It was a show home. It was called 47 Princess Gate. and the developer Avant decided they didn't want it anymore, so we put it to investors. Do you want to let it? We tried to find a tenant from a charity, but there was no demand in that area. And then we said, do you want to let it under an AST? And they said, no, we prefer to sell it. And they have sold it. And the secondary market has very much reflected the price that hopefully we will conclude on, touch wood, very shortly.
Mm-hmm. Yeah, and to another thing that I wanted to just show, because this is a question I had. If you come onto one of these deals and you're looking to buy some loan pieces, and for everybody out there who's always saying, well, there's not enough investments out there for me to deploy my money into, Assetz Exchange is actually a place right now that has a lot of availability in some of these houses, so you can get your money working for you straight away. But for instance, if I go into the Scarisbrick,
there's £165,000 still for sale at the launch price.
There is, and I wanted to explain this really quick because it was had me a little bit confused. But if you go into any one of these houses at the top, you might see the lowest yield amount. The highest yield amount, which one is 5.51%. There is £165,000 of available money, and I asked Peter, I said, well, what is this big chunk that appears at the beginning of some of these properties? And maybe you can just explain what that what the highest yield amount is, and what that larger amount, where is that money coming from? Like, who is selling that piece at the top that's the biggest?
Yeah, so we will source the property, we will go and make an offer on it, we will speak to the charity, we'll go and get everything sorted, we'll go through the legal process, etc., etc. And that process can take typically 5 to 6 months. And at that point, probably we will get like 1 to 2 weeks notice from our solicitor saying, if we expect to complete on this property in a week's time, please can you make the funds available? So we get very little notice to be able to go and get the cash to be able to buy the property and then put it on the platform. So we've had this thing called the Premium Investor Community going for over a year now, and that essentially means that anybody who has £50,000 or more on the platform becomes a premium investor. And we will send out, at the time we get the instruction from the solicitor, an email to our premium investors, and we'll say, here's a new property, come and have a look at it. It's been tenanted under these terms, here are all the details, and we are looking to buy it in a week's time. Please can you make a pledge if you are interested? And what we will do is that we will pay what we call a cashback, but it's a small amount of money for people who are prepared to provide their funds at short notice to be able to purchase this property, and that cashback depends upon the amount that you pledge. So I think on the Scarisbrick property we said if you put £100,000 up to be able to go and purchase the property, we'll pay you 1% cashback. So the premium investors who put up 100 grand to be able to go and do it got £1,000 back immediately. It's just a way for them to enhance their yield, and that money gets paid out of our fee that we take. So we don't like giving away cashbacks because it means we earn less. But at that time, that particular property was bought for a price of £575,000. And to make sure that everybody has a fair chance to invest in the property at the beginning, our FCA, principle of treating clients fairly, we force those premium investors who help finance property to sell between half and 3/4 of their holdings at the same price that they bought it at. So that 165,000 represents half approximately of the funds that we forced them to put up for sale when this property was first put on the market. And so everybody gets a chance to be able to go and buy in. And at the moment, that was launched alongside another property called New Down Walk, which pays 6%. Probably unsurprisingly, people have put more money into the 6% property than the 5.5% property.
Imagine that. Why would they want to do that? Thank you for the explanation, because I'm looking at some of the older ones and they don't have as much left, for example, on this Ash Villas in Nottingham. Out of the well, I don't know how much it was originally, but there's 7,574 left at the highest yield amount. So you can see as it draws down.
What we've typically got, people just most investors are just buy and hold investors. So they'll put their ISA allowance in each year, and they will spread it over into all the properties, putting £500 in each property and try and get 40 different properties. And they'll keep it there for however long they need it, which is usually years. And so what you tend to see is that the older properties become a little bit more illiquid because people they're very happy with their lot with them. Oops,
sorry. I was saying that I like the way in some of the older properties it has the rental performance little breakdown here. So if you come in to one of the older properties, you can see how the rents have been paid. You can also click on this income expenses and continuously breakdown. It just breaks down everything to do with the property, so you can really see the numbers. It's very transparent. So whoever designed the technological side did a good job.
That's Ben. He can take full credit for it.
You can give Ben a pat on the I was going to say backside. Don't do that. Give him a pat on the head.
No, I wouldn't.
That would be safe for the football. So yeah, that's pretty cool. And I don't know why somebody has a £1 order for 5.2% yield. I've seen a couple of people doing that for £1. Why would they do that? Who is that?
Well, people just testing things out, usually. And I mean, that's the other thing as well, is that we welcome all size of investor because we split the properties into approximate units of £1.
Mm-hmm.
So you get people who put £100 in a month, and then you get other people who are quite substantial investors on the platform.
Yeah. And also, if you scroll down, you can also see the recent trading history on all of these properties. So you can see what people have bought. And well, it doesn't tell you what they bought and sold. It just tells you the transaction amount of what's happened recently on that particular property. So there's quite a lot of transactional movement too. So yeah, that's cool. And a lot of information about the properties too on the page. So I'm glad I understand it more now, because I was a little confused by this order book and the way that it worked. So.
No, I think we're a peer-to-peer operator. We don't have an automated system, which I think a lot of people have wanted us to. But I think the FCA rightly is clamping down on those, so it's not actually they're discouraging it. So it does mean that we have to provide the level of transparency and information to investors as though they were buying the property themselves. Mm-hmm. So you've got the lease, the RICS, you've got all the management account information, and et cetera, as you just explained.
Okay, there's a couple of questions here that are coming in. Kind of go through this. Paul Bagworth says, let's see, how many investors do you have on your books, and is there enough investors to satisfy the demand at the moment? Is that a concern?
So a very good question. So we've got coming up to 2,500 registrations. They're not all active. I think it's 700 what we would class as active investors. So that's regularly investing in each property that comes along. As a small platform, and I think with all peer-to-peer generally, we do lurch from these imbalances between supply and demand. So from January to April, we were expecting quite a lot of property on the platform, and it didn't happen because there were delays. And as a result, there was more demand for properties than there were supply of properties. And that meant that prices were going up quite quickly on some of the markets. And people were complaining they couldn't get their money invested. And then in the latter half of May and June, that's completely swung the other way. So we've put out in our monthly letter that we released today, I think we did just under £4 million worth of new properties in June, which is more than the past 3 months combined. And to be fair, that's just too much. But we didn't have very much control over it. We'd much prefer to build up the supply of property gradually. But the thing is, you don't get that sometimes because you've got such long lead times and you're dealing with so many moving parts. You just don't have the chance to be able to delay these properties. So they were like London buses. Absolutely nothing, and then they all come along at once, which has been quite tricky. In answer to Paul's question, we're very aware of that. We have slowed down the origination in July, August, and September significantly, and we are doing more marketing to try and get more people to come on the platform and try and get that balance good again, and then we'll pick it up in the autumn.
You're a juggler. You're constantly juggling balls. That's what you're doing. It's like somebody throws you another ball and you got to put it in the mix.
But I mean, yes. I mean, it is. But I mean, Assetz Capital, our sister company, they've had completely the opposite problem for quite a long time now. People have struggled to get their money on that platform significantly.
Yeah, absolutely. Somebody's asking about Bitcoin. We'll do a little Bitcoin at the end of this, the end of the stream. So hang out and see. I'll tell you what my take is. Let's see. You're getting some good feedback saying you're very accessible to answer questions. So that's nice. There you go. Nice to get a compliment. Nice to get a compliment.
It is very nice to get a compliment.
Let's see. George Batchelor has a question. He says he's noticed that the average fixed costs are about 12 to 15% of the purchase price. Am I right in thinking that when the property is sold, if the sale price has not risen to cover these fixed costs, then there would be a capital loss?
Yes, that's correct. So that's something to bear in mind. And the 12 to 15% is... I mean, buy-to-let investors will say that that's too much. They don't do that. But, I mean, you've got to think that it's going to be very difficult for us ever to go back to investors and ask for more money should something bad to the property happen. And so you do have to have an adequate contingency fund when you start off. And also, if you're supplying these properties to Golden Lane Housing or NACRO, for example, they're regulated. So they've got to meet certain standards. So quite often these properties require upgrade costs to go with them as well. But George is absolutely correct. If you bought a property for 100,000 and you spent £15,000 on it with buying it, etc., unless you sold it for 115,000, you would make a loss.
Okay. See, Mike Powell says Assetz Exchange doesn't revalue the properties, so there's no way to understand what the true value of the property is. That's a valid point. Do you plan on doing some kind of a revaluation just so people can understand maybe what the value is?
There's two things that we do here. Yeah, I mean, so it's a very good point. But there's two things. We connect to the land registry that publish their HPI data for the local area. So each of the properties has got the HPI price rise or fall for that type of property in that local area. So that's a benchmark, not particularly accurate benchmark, admittedly, but it is a benchmark. The other thing is we've always said to investors that we're happy to commission a risk valuation, but it's got to be paid for out of the rental income of the property, because desktop valuations cost £200-300 now. Proper an inspection valuation would cost in the region of £400-500. So it's a low margin product that we operate in, and we don't have the margin to be able to pay for that for all those 50 properties. But if people want to go and vote to do it and they want to go and get it revalued, then we're happy to go and do that.
Okay.
But it would come out of the rental income.
I understand. All right. Paddy Gil, I can never pronounce his name. Gilfilin. I think his name is Jeff. So he's in France. So he says bonjour. I think he's in France. He says he has a medium-sized portfolio of ASTs. Peter, are you concerned at the government's new proposals for private landlords? I have quite a few private landlords I know saying they're thinking of selling because of these proposals. What's your take on that? I personally have not really studied this, so I don't have much of a comment on it.
So again, I think that would be one of the reasons that we don't really look at AST properties anymore. It's there's lots, rightly and wrongly, there's lots of things coming our way just on the whole EPC stuff, etc. So we're very mindful of that when we go and buy a property now. So it has to be a C, and if it's not a C, then you need the budget to be able to get it to a C and hopefully get that off the price that you're getting, that you're asking for. So I think it probably will become more challenging to be a landlord, but in the supported living space, I think the government's very supportive, because they want these people moved into the kind of accommodation that we're providing, rather than, say, hospital or residential care accommodation. Mm-hmm. So I think it's a better space to be, the supported living, than the AST space. I think you're going to find it easier.
Yeah,
as a landlord in that.
And you're doing something good for the community too, so, which I think is always a nice thing.
It is. I've worked in finance all my life, and as you said, you don't get many emails saying, "Oh, wow, you've made such a tremendous difference to someone's life." But we do get the occasional email from some of the occupants who we've provided properties for, and they are absolutely delightful. It does put a smile on one's face.
That's awesome. That's good. Let's see. Talk to me about your relationship with Assetz Capital. Are you guys still working together in some capacity, or is it more things have changed?
Yeah, very much so. So, I mean, the common denominator is Stuart. So Stuart's the Stuart Law. He's the chairman of Assetz Exchange and is the chief executive officer of Assetz Capital. He's the largest shareholder in both businesses, and so it is great. We've been able to say, Stuart, we need help in this, and he's been able to say to people in Assetz Capital, please, can you help out? And that's been tremendous help. We are legally, regulatory, completely separate companies. They are our living will provider. So if we were to go into a wind down situation, they would step in and look after us, and wind down the book, or take over us and invest in us, and whatever they decided to do. And they are a shareholder in ours, a small shareholder, and that's that shareholding represents the living will provision that they provide. Although we're separate, we got that commonality in terms of management team through Stuart. They are a shareholder of us, but I mean, the area that they've been tremendously helpful is that they have a lot of investors who haven't been able to deploy their funds, and they decided that it would be better to try and make their investor base aware of Assetz Exchange rather than lose those investors and the funds. So we have benefited tremendously from a couple of emails that they've sent out to their database, making their investors aware of Assetz Exchange, and that has saved us a lot of money. It's very, very expensive winning new customers.
Yeah, I know. It's I charge people a ton of money to advertise on on financial things. No, that's a joke, but very true. So listen, everybody out there, if you want to sign up and try out Assetz Exchange, there is a link in the description below. This is not a paid advertising bit. I do it because I like Peter and I like the product that he's putting out, and so I don't take any payments for anything like this. So this is all that I want to see Assetz Exchange flourish and continue to grow and give you guys a solid place to, what I think is a solid place to invest money. Not financial advice, of course, but it's just my opinion. Let me ask you one more question, and I'm going to let you go. Maybe I'll let you have a final comments, like if we were in court, you get the final word. But I think that we are in for a nasty global knock on the head. And it's not here yet, but it's bubbling on the surface. What I like about what you're doing is it seems like you're somewhat protected from that possible down cycle in the economy, which I think the UK is going to have, the US certainly is going to have it. What's your take on where you think the economy is going to go in the next half a year, and is that going to affect Assetz Exchange in any way?
I think, big question, and I think probably my colleague Ben's probably in a better position to answer this. But I think they're a mixture of like opposing factors there. I think inflation, and I probably agree with you, it's not going to be transitory. Will mean that we're going to get rate rises and continued rate rises. I think that is going to put pressure on costs throughout the whole of the economy, not least to us, is the fact that I think investors, if we're going to be able to attract them, are going to expect a certain return. So we're going to have to try and fight to go and get lower property prices, and also increase rents from the people that we charge to be able to go and get that funding going and continuing. So I think that's one aspect to be aware of. But I think, it might be that we have got new legislation coming in that's going to make it more and more difficult for landlords, etc. But at the same time, there is still this fundamental shortage of housing in the UK. And the kind of housing that we're looking at, which are often bungalows, they're often in, suburban out of town areas, those are increasing. It's becoming difficult, more and more difficult to find those kind of properties. So I think that's a big positive and in that kind of side in terms of protection, etc. And I think it kind of feeds off itself. As soon as people start feeling cautious, they become cautious, and then being cautious makes them even more cautious because things slow down even more. And it kind of feels that we're at the beginning of that kind of cycle at the moment. So I wouldn't be in a position to say that I could predict with any certainty when this crunch is coming and if this crunch is coming. But I think there's certainly a mood swing that we've noticed, but there are some positives at the same time. So I'm fence sitting, I'm afraid, Lawrence. Having spent 15 years in an equity analyst trying to predict companies' forecasts and getting it miserably wrong without exception, I've learned my lesson.
It's so hard. I don't know if you follow, but I've been doing this thing called the Trading 212 portfolio, where I dumped a bunch of my own money into an equity portfolio, and I show the results of it. And I've had some miserable buys. I've had some good ones, some good results, but I've had a couple of miserable ones that on paper the economics look great, but the stock price is just terrible, and I don't understand sometimes the sentiment of the markets and the way that they work when everything looks so glowing on paper and the forecast looks glowing, but the stock price decides to go down 30%. So I can't figure it out. I'm not sure anybody can. Who knows?
Well, maybe momentum trading is for you then, Lawrence.
No, I think Lawrence gets into trading. That will probably be the end of all of my life and everything I've tried to achieve. One other question, a couple of other things, and then I'm going to let you say what you need to say, and then let you go have some time with your folks. Mike Powell says, I think I know what you're going to say to this, but I'll let you answer. Apart from the development loan on a Scottish castle and the upcoming flats, I'm presuming he's talking about loans on Assetz Capital, do you see much scope for collaboration with Assetz Capital in terms of buying properties from them that they are trying to exit out of?
No, well, yeah, good question, Mike. And I think he's referring to Row Allen, which is a development loan, and also there is, I think it's Livingston, but anyway. My colleague James, we've made presentations to Assetz Capital sourcing team to let them know that we are potential forward purchasers of some of the properties that they are financing. And I think this is just another tool for them to be able to hopefully try and win business. And we've had a couple of strong expressions of interest on that front. I think there was one particular one. There was a hotel conversion that was going to be used for supported living, and we said, "Oh, we'd be delighted to buy the end product," and they were going to supply the development finance there. So I do think there's a lot of collaboration that we can do on that front. And I think they speak to a lot of different developers throughout the UK. So there's a lot of scope for potential crossover. It hasn't happened of yet. I think that's probably part of the growth plans of 2023 that we'll start sort of exploring, because I do think, I mean, they're a much bigger organisation. They've got 120 people working for them. We've got 5. So it would be very nice to dovetail on the back of their sourcing team as well as their marketing team, which we've done so far.
Mm-hmm. So possibilities are for the future. Sounds good. Peter, anything else that you want to say to the masses out there who are watching in the future about Assetz Exchange and why they should come invest through you?
No, I think first and foremost, thank you very much for sacrificing your Thursday evening to listen to me. So it's very kind of you, and thank you, Lawrence, for inviting me on the show. I would obviously love for people to come onto Assetz Exchange and dip their toe in. It's very easy to do. It's very quick and simple to be able to go and set up accounts just like it is on any other peer-to-peer platform. But there's no minimum amount that you have to put in, so it's very easy to go and test the water. As you say, there's some good. To coin a completely naff expression, Assetz Exchange is where the head and the heart align. So you're getting a good return, but at the same time, you are providing these charities that we work with a genuinely more competitive and cheaper option, a more flexible option than what they've currently got at the moment. So it is. I would love Assetz Exchange to be a part of anybody's portfolio.
Cool. I like it. Okay, well, Peter, we'll have you back on in the future if you would like to do that. Just get an update in a few months from you, see how things are doing. And thank you again for your time. It was really informative, and I think everybody really enjoyed it. So thanks so much.
Thank you. Thanks, Lawrence, and thanks, everybody.
All right. Take care.
We'll see you on.
Bye.
Cheers. Bye.
So there you have it. Peter Reed, Assetz Exchange. We bring you the people who are important here on this stream. I might not be here every week. I try to be, but we bring you the important people and let you get your questions answered directly from the source, from the horse's mouth. Let's have a quick chat about what the hell is going on in the stock markets and Mr. Bitcoin. But I'll be back on Tuesday, hopefully, for a more in-depth chat about this. But listen, I will tell you what I think is. I think there is something nasty brewing economically on the horizon. To ignore that would be foolish. Judging by everything that is going on, we have rising interest rates, which will put a damper on the housing market because mortgages are becoming more expensive. I've seen it myself. I was looking at getting a mortgage just a few months ago, and I've seen how much the costs have risen as far as the payments are going to be on that mortgage. And I said, no, I'm not going to do it. I'm not taking on the debt. The US, we got the government, the Fed, trying to curb this horrible inflation problem. Which you're seeing in the UK too. You're seeing, obviously, high power electricity, consumables, prices are going up, petrol's getting more expensive. And then you see some companies like Tesla, for instance, is saying they're going to lay off 10% of their workforce. I mean, this is no coincidence. This is kind of something that we've known has been happening for a while. But I think, a lot of us have been closing our eyes going, oh, maybe it's not going to happen. Maybe this big economic downfall isn't happening. Well, I can tell you, I personally think it is. And the big question is, when is it coming? Nobody knows. That's the problem. It's all about market sentiment. It's all about what people think and what they feel. So everything is based on panic, fear, greed, and contentment. Right now, I think there's this contentment where people are staying invested for the most part. But there's also this level of fear. And I think once people start to get very fearful, the money comes out of equities, out of stocks, probably goes into things like bonds and treasuries. Your equity market is going to go negative, and so will cryptocurrency. That's just the way it is. Crypto is a retail market. It's just the way it is. But it presents massive buying opportunities. If you have the stomach to buy when everybody else is selling, that is how you make money in these markets. So if I had to make a prediction, if I had to pull out the crystal ball, when I think this market correction is possibly going to go negative 20%, I think it could be within the next 3 to 4 months. We have the federal government in the US doing quantitative tightening, so they've done quantitative easing where they put money in, pumped into the economy. Now they're pulling back on that, and then they're doing the complete reversal, which is quantitative tightening, where they're selling bonds that they have on their balance sheet out onto the open market. That is designed to shrink the economy. It's going to happen in the UK too. So just be aware of what's going on out there if you're worried. If you have cash, I think it's a great time to sit on your money. And there's going to be some great investment opportunities that are presented to us in the equity. If you're into cryptocurrency like I am, Bitcoin is going to possibly go as low as 12,000 US dollars. Who knows? It could go lower, but I still have complete belief that the fundamentals of Bitcoin have not changed. Nothing has changed. We have a halving in 2024, which I think is going to send the price much, much, much higher. And in 7 to 10 years, I truly believe, and you can come back 7 to 10 years and say, "Hey, you were wrong," but I do believe the price will be in the $500,000 range. Doesn't look like it could happen right now, but I believe it will. So that's my take. Anyways, I am going to go because it is unbearably hot here in Florida, and I have to go. But listen, it's been great. Hit that thumbs up if you enjoyed the stream. Go try Assetz Exchange out. We'll be back next Thursday. Who knows what the topic will be? Maybe we'll have another guest. Who knows? Possibly. I think we'll be back on Tuesday too. So you'll get an email if you're signed up to the Financial Thing email list. Join the Facebook group. Consider becoming a Patreon supporter. And I love every one of you. Thank you for your support. Thank you for being here. And I will see you next time. Take care. Bye-bye.